Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why it's almost guaranteed at this point that Bitcoin in the stock market sees more short-term downside. I also want to celebrate you in the case that you've been holding puts like you know you should have been, because as you know, anyone can make money in a bull market, but it takes skill and discipline to make money in a bear market when things are going down. So if you're properly hedged, if you're profiting from this crash like I know many of you are, cheers to you. We'll talk more about that over the course of this video because we do have a lot of macro to talk. We'll kick off the video by reading over a few highlights that I took from the newsletters that I've written over the past couple of days because they perfectly sum up my thoughts on the overall macroeconomic environment at the moment. Okay, so we'll take a look at these two to kick the video off. We will then mix it up, get technical, got to mix in the technicals with the fundamentals. So after we read over those, we'll jump into the charts and talk some Bitcoin, talk about the king of the crypto markets because things, as we anticipated, you guys, are not looking good. And I mean, what I've been calling in the newsletter, my drop anchor level has been broken, and I do want to talk to you guys. Of course, you guys know I'm bearish about my downside price targets over a short-term time horizon. Okay, so we will cover BTC. We'll also cover the S&P 500 or the SPY ETF because that's a single chart that I feel best sums up the U.S. equity markets. So we'll cover this. We'll cover BTC, but before we dive into the SPY on the charts, I do want to read over this CNBC Pro article titled "Here's What Investors Are Saying and Doing About the Market's Drop." So it's always good to get a diverse set of opinions, you guys. Always want to mix up the amount of opinions you're getting from different analysts. So we'll go over a few, I mean, just the first two here, but I feel like these were the two best analyst opinions on the big price spike that we saw yesterday, as well as the big sell-off that we saw as of today. Thursday, May 5th, the time of recording. So we'll cover these just to mix up again, just the points of opinion from different market analysts. And I do want to let you guys know right now that these do, I mean, they're all pretty much the same, but they do each have a unique take that I want to share with you guys. So before we dive into the SPY, we'll close out the fundamental take with reading over some of the opinions from different analysts. Okay. So that's pretty much the video, you guys. Before we get into it, I do want to let you know that I will not be posting a video for the next few days. And next week will likely be very, very rough with the YouTube content. But you guys know the drill. The less time I spend making YouTube videos and prepping for YouTube videos, the more time I have to dedicate to the newsletter, the more mental energy I have, and the more willpower I have, honestly, to make an even better newsletter. So just want you guys to know that. If you want to stay tuned with what I'm personally doing with the newsletters, with my opinion over the following week of what will probably be some very, very, we'll call it exciting, scary yet exciting price action. Just know the newsletter is coming in hot every single trading day during market hours. Okay, so speaking of the newsletter, let's read some of the highlights that I made. So happy Boys Day to all my boys out there. Happy Cinco de Mayo to all those who celebrated. And happy Markets Are Bleeding Day to all of our short positions. As I said in the Trade Alert newsletter, we called the market's bluff on yesterday's rally, and we couldn't have been more right with that call. These puts are even hotter than the markets today. Just an actual photo of me this morning watching the markets. At this point, I'm feeling nice. Actually, you know what? Before we get into the hot take, I want to validate that the statement I made about how we called the market's bluff by reading my take on the markets just as the market spiked, as we saw the Federal Reserve talking about, as we saw the Fed meeting kind of initiate that massive price spike on Wednesday's day of trading, which was, of course, immediately followed by today's sell-off. I do want to justify that statement where I said that we called the bluff correctly. Okay. So as you can see here, Dow rallies. This was immediately after Powell wrapped up some of his notes, and you can see, the timestamp. All things here, just if you guys want some little point of proof. Whoa, dude. Okay, but I do want to let you know that I don't believe that the manic spike in price action that we're seeing as we close out the day will be reflected on as anything more than a textbook relief rally. The primary catalyst for this upside was the fact that Jerome Powell announced that they weren't considering a 0.75% rate hike. If you remember, I did say this would be a major factor a few days ago, and investors are elated. That said, now these are just the points we've been repeating for so long. Rates are still rising, the economy is still slowing, and inflation is still hot. It's very possible that the markets stage a medium-term comeback following this announcement, but the macro backdrop is still objectively bearish. Therefore, I still lean towards medium-term downside, even though the short term is currently feeling so optimistic. And also, again, if you guys hopped in on this one with me, cheers to you. I did sell some of the coin calls that were looking beautiful yesterday, shaping up beautifully, and bought more SPY puts or shorting, again, the S&P with the proceeds from those Coinbase calls. And that today, I mean, those puts 3x today. And yeah, the portfolio, again, you guys, the portfolio was highly lucrative today, even in the wake of such market-wide sell-off, of such a bloody watch list. Okay, so again, you guys, it's important to remember that there are ways to make money during market downturns, and that's why if you do want the daily newsletter, if you want to know exactly how I'm trading on a daily basis, plug it right now before we get into the rest of this and dive into Bitcoin and the charts. If you guys want my daily newsletter, if you guys want a complete breakdown of my entire personal portfolio, you want to know exactly how I'm trading my puts, when I establish my puts, why I do this, because I do explain why I'm doing what I'm doing in the newsletter. I do send out daily charts and daily price targets, let you guys know when I'm wanting to take profits and whatnot, okay? So if you guys want that, that is $15 a month, $40 for every 3 months. I believe you're doing yourself a favor. The portfolio spoke for me today based on just the gains that we saw. In the case, of course, never want you guys to copy me. I definitely advise against you directly copying me. But again, learn from my successes, learn from the patterns that I win from, that I lose from, and adapt those to your own strategy. Okay, so first link down below in the description box if you guys want to join the next level up of the Waves fam. Again, appreciate it if you guys check it out. I truly do feel like you're doing yourself a service, but if not, no worries at all. Appreciate you watching this, and I hope you do get something from this video as well. Okay, so at this point, I'm feeling 95% confident that more downside will follow over the short term. Traces of any uptrends have been broken. Investor confidence is reaching new lows, but most of all, this is important, you guys. Boom, right here. There's literally nothing that can save the markets from further downside at this point. Let me elaborate on that a little bit. So, when the market saw any downside over the course of late 2020 through 2021, because the Fed had such a strong balance sheet, which is now being reduced. Again, don't fight the Fed. It works on the way up. It will work on the way down just as much, okay? On top of everything else, the economy slowing, etc. Terrible jobs report, etc., etc. Okay? So, before 2020, 2021, again, when the markets went down, the Fed could step in and use their balance sheet to save the markets and just buy assets and pump the stock market. We saw that so many times over the course of 2020, 2021. So the Fed was literally injecting liquidity into the markets and keeping the markets floating. Now, because they're reducing their balance sheet, they're not willing to do that anymore. So before, when the markets tanked, the Fed saved it. Now, the Fed is completely backstepping on what it was doing the past couple of years, and it's going actually on the offense. It was on the defense, now it's on the offense. And now, there is no fundamental macro catalysts that can save the markets. Earnings season amongst big tech is now over as well. So earnings season, big tech earnings. There were some winners, but mostly losers. Okay, mostly losers, you guys. Spotify eBay, Etsy tanked. E-commerce is getting smashed. Spotify, just after market close today, announced earnings. They're getting absolutely obliterated in after hours because they're showing that online consumption is slowing. And if e-com is slowing, then everything is slowing. Okay, that's very important to realize. Okay, and yesterday's Fed meeting was the only hope that the markets had for any sort of fundamental comeback. This right here, you guys might recognize this, the good old TradingView bull bear meter. This is what pretty much every chart on TradingView looks like right now. Okay, and again, I don't put a lot of weight on this, but that's just the cherry on top of, and if it reinforces the analyses that I already have. Okay, so hedge funds and institutions try to fake out the markets without rip to the upside so they can liquidate their positions because they need to. The price action we're seeing in the markets today is forced selling and the liquidations of large levered positions. It's taken a bit longer than anticipated, but I think that we're finally entering the true cleansing period that many traders have been waiting for. A lot of us included. I've been repeating this almost every newsletter, but that's because it's so key when it comes to the macro, and it's also so simple. When there aren't any bullish arguments to be made, it's irrational not to be bearish. And I've been harping this, you guys, but that's just, it's really not complex. There's a lot of moving pieces. There's a lot of underlying complexity to trading and analyzing the macroeconomic environment when you want to implement that data set to your trading, but it's really not that hard. If there's not any bullish arguments, you got to be bearish, okay? So that's that, you guys. That does sum up my personal, just again, what I summed up in the newsletters over the past couple of days. So those are my thoughts. Those are my 2 cents right there. Let's dive into Bitcoin on the charts, because Bitcoin is absolutely not looking good right now. Bitcoin, there from multiple perspectives. I'll just talk to you guys about what has been broken. Okay, so Bitcoin, with this drop down, has created an obvious new lower low on the current downtrend. It has also broken a significant line of support on this downtrend dating back to the end of March. Okay, so since the end of March, Bitcoin has been a very, very obvious descending channel pattern. Okay, boom, line of resistance. We just tested that yesterday. I was very skeptical. Again, in the newsletter, shouted that out. I did think that was a bull trap. I'm sorry, because we perfectly tested the line of resistance here. That was validated, turned back to the downside, and now we have broken and closed a 4-hour and daily candle below the line of support, signaling signaling a textbook defined downtrend. Okay, we have broken support. Okay, so Bitcoin down to short-term downtrend. On top of that, we have broken a very, very significant long-term line of resistance. My Wi-Fi. Okay, so this line is very significant as well. Okay, and this is why this has been a very key level that now that it's broken is, just another reason. It is also, on top of breaking short-term support, broken long-term support on this uptrend. So as Bitcoin has officially broken the last line of support on its longer term uptrend dating all the way back to January of this year. Okay, late January, boom, touch point here, creating the line of support. Has been testing it over the past couple of weeks, I should say, week or so, couple of weeks. But now the point is, closed a daily, closed a 4-hour below that, also closed one below this previous. I've been talking about this level. Let me know if you guys have been reading the newsletters, let me know down below. We've been talking about this level, this $37,000 level for so long now. And now that Bitcoin has broken well below and closed below all of these levels of support, that is once again, as I've been stating it, the drop anchor target. I think it will be a quick descent to the $32,000 level. It could be much lower, but the reason I'm doing that is because I simply took the last big dump we saw on this on the shorter term downtrend right here, top to bottom, did span April 5th to April 10th, did span about 5 days. In that 5 days, we dropped about 17%. If you just copy paste that from the top to bottom here, that would translate to a 19% drop to where we are now. And again, I wouldn't be surprised at all if it is honestly much lower than that, because I do see pain ahead for the equity markets. Again, we'll cover the SPY right after this, but point is, I think Bitcoin will see $32,000 over the next few days. I should say over the next 5 days, just to play it safe. And this May 10th, May 11th range, which is next Tuesday, next Wednesday, does really perfectly align with my downside price targets for the SPY, for honestly Tesla, a lot of the other names that I've personally been shorting as well. Okay, so that's Bitcoin. Again, you guys, keep you posted a lot in the newsletter. Next week will be light with the YouTube content, but I'll try to hop in if I can. It's a busy week, but okay. Anyway, moving on, SPY to close it out. But first, we do have to cover a few of these analyst opinions, okay? So, what are investors thinking? Josh Brown, if you're trying to be at all tactical, you can only rely on price. You can only rely on technical. So, here's what I would tell you. We're in a defined downtrend for the NASDAQ for a while, okay? So, tactically, if you're obeying anything like a 10-month moving average or a 200-day moving average or an 8-month, whatever the way you do it, whatever the way you do tactical, if you're at all rules-based, which absolutely, we as traders should all be rules-based. Okay, you gotta abide by the tape, and we run our rules-based. You're not in NASDAQ in that part of your portfolio. This guy was kind of just spitting, so this is a little confusing. But this bottom half is what I personally like more. Now the S&P joins the party to the downside. I told you at the end of April, looks like we're going to finish this month below the 200-day, below the 10-month. Quote, you might think those are just squiggly lines drawn on a chart. 100% agree with this. It's crazy how much these stick figures, these weird little stick figures that anyone can draw, hold so much significance. But I can tell you, price has memory, and people remember what price they own something, what price they don't own it, where they're trapping a stock. Price is meaningful. Again, price and charts, you guys, it's all psychology. The market trading, so much of this game and any game you ever play is rooted deeply in psychology. And what charts are, what all these squiggly lines are, is human nature and psychology visualized. Okay, that's how I have always perceived it, at least. Okay, So now you're in a defined downtrend for the S&P 500 with probably next month a negatively sloping moving average, which makes it even worse. So if you're doing this in a rules-based tactical way, you have some semblance of an answer. And this is especially important, you guys. Again, the technicals are more important than ever. There isn't so much retail mania. There's no fundamentals to lean on. Everything is technical in this market because it's a bunch of quants and hedge funds who are dictating price action, okay? And also scaring people out of the markets. Like that was the biggest bull trap of all time when we saw it yesterday. And you know how much retail bought into that and then just got swallowed up today? So many retail just got smoked today. I feel that's awful. But again, you guys, that's what you have to understand the macro and you have to understand what's going on underneath the surface, okay? Again, that's why it's not easy. It does take skill and experience to make money in a bear market. It does take it takes a gut, man. It takes a strong stomach. Okay, so we'll read this and we'll dive into the spot to close it out. Quote, this isn't necessarily retail people trading here. There's some heavy pressure on the market, Paul Hickey. Yesterday afternoon, we saw a lot of excitement when Powell took 75 basis points at a single meeting off the table. But I think if you were listening to the press conference, it overshadowed some other commentary that hardly painted a rosy picture. At one point, he was saying we had a good chance of a softish landing, and then talking about the process of tightening isn't going to be pleasant. So again, you guys, that was kind of that was the smoke screen, right? That was the diversion tactic that Powell used, was just saying, no, we're not doing 75 basis point rate hike. But that was just, again, that was a smoke screen. Now it's like, oh man, everyone was so scared of the 75, just the word 75 in general. But that distracted everybody from the underlying reality that, again, economy is still slowing, inflation is still hot, or it's very, very extremely likely that we are entering a longer term recession, okay? People are running out of money. Just look around. It's very evident to me. The market's been melting. Jobless claims, again, are terrible. Everyone thought they could make money with crypto, but that's, a lot of people are learning the sad reality of life after just 2 years of kind of just a craziness and euphoria, right? So the reality is right now we are entering a very, very difficult time from an economic perspective, from a consumer perspective. And when nothing is bullish, you got to be bearish, okay? So that's that, you guys. I did like both of these takes. One a little more technical, one more fundamental. But again, it's all rooted in psychology right now. Investors are scared, and the psychology is terrible. So similar thing here. I'm not even going to go back. I'm not even going to elaborate this longer term. These longer term targets. But again, newsletter. Shout out to you guys. You guys know why these are the targets. This purple line right here, the 395 level, is where I do think the SPY will be. Same thing here. I was talking this morning in part 2 of the newsletter about the 2-wave that I think is playing out. Again, 2-wave, good old Waves fam patented 2-wave pattern. The 2-wave. We'd like to play it to the upside. We always talk about it to the upside, but it works to the downside as well. And we saw the first wave, again, big move down, followed by some sideways price action. Usually big move up, sideways, another move up, down, sideways, another move down, okay? When you see a significant move, it's usually followed by that dead cat bounce, by that relief rally, which we saw here over the past few sessions, which, again, is always followed, almost always, I should say, not always, almost always followed by another move in the direction of the initial move, only greater. So again, talked about Bitcoin, did a copy-paste, doing a copy-paste here as well. Honestly, I think it could be a lot more significant than this, but at the very least, I think the SPY will see 395. If you just, boom, copy paste this. The top to bottom here, April 20th to April 27th. That was about 6 days over the course of 4 or 5 trading sessions. You copy paste that from the top here, from yesterday's, again, relief rally, manic rally. Take the top there to the bottom. That would take us to just under 395 on May 11th. And again, May 10th, May 11th is when I believe we will see at least a short-term bottom, maybe a bounce and more downside. But again, you guys, the short-term at this point is very, very dismal. It's very bleak on the count of nothing being bullish. And again, nothing can save the markets right now. So again, hope you guys are loaded up with puts. Stay safe out there. If you don't want to trade puts, that's perfectly fine. Just stay on the sidelines. Keep cash, because cash right now, if you haven't learned by now, cash is king. But hey, if you got puts, like your boy, if you are eating good with me, if you are smirking in just an evil little way like this one, shout out to you guys. Cheers to you. And again, I will probably see you here in maybe a week or so. Okay, so if not, I'll see you you guys know the drill, every trading day in the newsletter. Also Sunday stock watch, I'll give you guys like a little newsletter on Sunday as well. Catch up with you guys, throw some charts in there, just let you guys know what I'm thinking going into the week. But again, that won't be a video this week, that will be a newsletter. So stay tuned for that. Love you guys, appreciate you. Again, stay safe out there, and I'll catch you in the comments downstairs. Till next time, always remember, take action. make waves. Peace.